Hello from Mounted Markets and welcome to our weekly economic outlook. I'm Ahura and will be with you to have a short outlook on global economy in the week ahead, which is going to be the second week of 2025. Yes, already 2025. At the first week, while we had holidays in many economies, still we had some important data to watch, including manufacturing PMIs and initial jobless or labor market data from the United States. As for PMIs, most manufacturing PMIs published from the economies, including from, let's say this better to say one by one. From the China, manufacturing PMI fell from 50.3 to 50.1, but non-manufacturing with service sector increased from 50 to 52.2, which increased the composite PMI as well. In Eurozone, data generally showed that the Eurozone manufacturing PMI from 45.2 fell to 45.1. In some economies, it was better than expected. In some economies, it was lower than expected. Generally, we can say that the economic activities in December in most economies, they increased a little bit, even thought if they were less than expectation in some of economies. For example, same thing that we had in Spain, which increased from 53.1 to 53.3, but it was less than 53.6. Generally, the data were fine. About the Eurozone, I have to mention one thing. If you remember last year, we were talking about the Eurozone. When we were talking about the Eurozone, I was mentioning mostly always about the France, and we're talking that, okay, we have to take care about the France data because France economy is going to be performance better than German economies, which happened as well. Generally, the German France economy was better. For the year ahead, for 2025, I have to say that you guys have to focus mostly on Spain and Italy. These two economies, Spain and Italy. Remember, Spain and Italy, they're going to be the main market mover for Eurozone, the main market mover for Euro economies. And so we will talk about them, about these two economies later during 2025, much more. Generally, besides that, it didn't have any other data to say that, okay, it was very important to watch. In Turkey, the inflation fell to 44.3 or 44.4, we can say better. Last year during the January, when we were talking about inflation in Turkey, it was about 56%, and now it's about 44%. We can say that the higher inflation, the higher rates by central banks worked somehow. Now the inflation is very low, and now I have to see and watch and see what is going to happen in the next interest rates decision for central bank in Turkey, as they already could control somehow the inflation, but still is so high. Once another, the economy is moving very slowly because of the higher rates, and now we have to wait and see how this cutting the rates can affect the economies. Okay, let's go further and we say that in United States we had initial jobless claims, only 211,000 new applies for unemployment benefit. It was wonderful. We can say that the labor market is still booming in the United States and shows that it's power. On the manufacturing sector, also PMIs increased from 48.4 to 49.3, which means that the economic activities in the United States is still very good. And now the focus is going to be more on the next week's data. While we're on the United States, let's continue with the United States. The week ahead mostly will be actually about the United States because other economies they wouldn't have too much data to watch. But in the United States, you're going to have a very busy week. On Tuesday, especially in the labor market data, we have initial jobless claims, we have GLPs and we have NFP. And at the same time, we will have the December Federal Reserve meeting minutes as well. On the Fed meeting minutes, the December meeting, we had the economic outlook as well, dot points, and expectations from the inflation and so others. That's why the meeting minutes of December meeting, which is going to be published on Wednesday, will be very important, as it will give us more information and more data on how these economies, how the members and Fed members, they are thinking about the next Federal Reserve movement. So that's why it will be very important to watch and see. It will give us more idea of what possible decision can be would be made by the Fed members in their January and probably March meeting. For now, for January, we don't have any expectation to cut the rates. More probably, they're gonna hold the rates at the current level, especially as we are going to start a new year, new government, and we can say that at the very beginning, we don't want to see any surprise. Also, the other important thing to watch is, as I told, it will be the United States Federal NFP numbers, which is going to be published on Friday. So we are expecting to see around 150,000 newly created jobs on the public sector and the private sector, create almost 130,000 new jobs, which means generally we're going to have the unemployment rate unchanged at 4.2%, while we expect to see average earnings increase by 4% annually and 0.3% monthly. If we don't see even the surprise and if market just repeat the expected numbers, it will mean that the labor market is still strong, and it will confirm the idea of not cutting the rate in January meeting. This is the most important data we're going to have in United States. Out of the United States, in Eurozone, we're going to have on Monday, we're going to have PMI numbers. PMI numbers for the service sector, we expect a little bit increasing on the PMI numbers, as I mentioned earlier. This is for December data, New Year sales, holidays. So the PMI numbers on December are going to be usually the positive, especially for the service sector. So we don't see any surprise there. In Eurozone, we're going to have the inflation number. We expect to see the inflation on the monthly scale to stay unchanged at 0%, unchanged or 0%, as after November 0.3% fall. So annual inflation for the core inflation going to stay unchanged at 2.7%, and for headline inflation, it will increase slightly from 2.2% to 2.4%. This is the most important numbers that we're going to have in the Eurozone. Out of the Eurozone also, especially in UK or China, we don't have any other important data to watch. Let's check the charts and see what's going on in the charts. As we are looking to the charts, first let's start with the US dollar. Let's bring the US dollar in US index chart. US dollar start the year at the beginning with a little bit positive, with the positive movement, but later started to lose some of its gain. The losing of its gain, the losing of the gain, it's actually, we can say that it was overreacted at the last days of the 2024. So now it's giving back some of these overreacted gains, and it doesn't mean that the US dollar getting weaker. It means that it's giving up just only the sum of its overgained. Actually, we can say that the overgained number. So this cannot be say that okay, the coin is like step back of the US dollar. And especially we expect to see hawkish tone in the meeting in December meeting minutes on one hand. On the other hand, we are expecting to see a positive labor market data. Generally, these numbers and these data will tell us that we're going to have the higher interest rates for longer. So US dollar index can hold its gains around above 108, a little bit higher or lower, but 108 is going to be the key level for US dollar index. Gold lost at the very beginning days in 2020 as really the last days of New Year. Usually people they're gonna buy, especially the gold and stuff like that, to for avoiding the paying more tax and sending their money to some more investment in that part as well. So the gold gained of that, but at the first days gave back some of its gains, but generally the gold still in a uptrend, and we can say that still you can hold is the gold, you can hold the golds that if you had a buy, still you can hold it, and we are still in a very positive move, especially as long as it is trading above 2,600 as its key fundamental and key technical data and psychological level. On the energy front, oil gained last days of 2024, beginning of 2025, which was very likely, and we talked about that as we were getting closer to the new year. Production is higher. We have more travels, and all of them, and we have a very cold winter, as you can see on my face as well. The effect of this cold winter. We have this cold winter, all of them, it means that we need more energy and we need more heating energy, especially, and that's altogether increased the demand for the energy, the demand for the oil, and then increase the prices. So generally, we see that's why we saw the inflation, we saw the rates to see the prices for the energy market for the oil higher than previous levels. And we can say, but at the first days of 2025, next week, especially for the oil, we're going to have the stabilization market around, probably we'll have the oil price around $72. Technically, it's overbought and it needs some correction. And fundamentally, we have a lower activities in the manufacturing sector, so less demand and the first weeks of January. So that all of them, it means that we're going to have stabilization of the prices, if only this we are talking about it from the economic point of view. But if something especially happen on the geopolitical front, especially in the Middle East, then it can change the game. But for now, we expect to see a slightly stable market around $72. On the stock market front, the next we can say that it's gonna be the next week it's gonna say that the correction week, and we expect to see with the positive economic data from the United States, which means that the more hawkish tone on this Federal Reserve actions, we can say that now we expect to see the more pressure on the stock market in the United States. And for next weeks, we're gonna have the lower, especially in the week ahead, we're gonna have lower prices with the, but it's not gonna be the fall, it's gonna be lower prices. As for Bitcoin, technically it's in a positive mood again, back above 2,000, above 94,000. The thing is that soon the next government in White House gonna start its job, and with the promises that the Mr. Trump administrations had about the cryptocurrency market, now the crypto traders and investors going to wait and see what this new government is going to tell us. That's why we are not expecting any excited movement at the first month, especially in January and February, and mostly investors and the traders, especially the investors, will be wait and see can the new government keep these promises and do the changes and all the hopes that they give to the market or not. So that's why we can say that the movement in the cryptocurrency market in the next 2-3 weeks gonna be the smooth, most probably, and then we're gonna slightly we'll be wait for the news and decisions, news about the decisions that the new administration is going to make. So for now, for the week ahead, we expect this slight movement probably for the cryptocurrency, especially on the Bitcoin market. This is our expectations and outlook for the week ahead. If you had any other questions, please write down in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye.